I am pleased to welcome to Concordia Grant Harris, CEO of Connect Frontier LLC, James Mnyupe, Economic Advisor to the President of the Republic of Namibia, Aubrey Hruby, Senior Fellow of Atlanta Council and a Concordia Advisor, and here to moderate this discussion, Concordia Advisor Josh Sandler, co-founder and CEO of Lori. Josh, over to you.
Thanks so much. It's great to be here. Such a privilege to be alongside everyone in this room. Excited for the conversation today. Some leading minds behind new capital opportunities and how they see them in the day-to-day. So to kick it off, maybe perhaps we go to Grant. And Grant, you're one of the driving forces behind the U.S.-Africa Leaders Summit that Obama, big part of his Africa focus for his presidency. Want to understand, when you were putting that together, coming up with the idea and driving $37 billion of ideas that came about from that conference to the continent, how did you approach that monumentous task to push money from the U.S. towards Africa?
Thank you. It's a great question. The idea behind the CEO Forum and the Africa Leaders Summit was, in addition to having other goals, a primary goal was to try to highlight the economic opportunities in the region. And we wanted to have a CEO forum with leaders from the continent and from the United States that would be able to ink deals, advertise, and the successes that they've been having, and talk about some of the policy issues as well that would unlock greater investment. And one of the themes that was discussed there as well is how African leaders can be wooing capital from abroad, as states are competing with many other possibilities for where investors can be looking to earn returns. And there was a lot of discussion about economic governance, policy consistency, the types of things that I'm sure we'll be talking about in this quick window today.
Absolutely. And I mean, on that note, James, when you're looking at attracting capital from into Namibia, where are you looking? I mean, personally, for our business, Lori, we had difficulty getting money from the U.S. We had to look both to China, but also more recently within Africa. We just received a large investment from a strategic based off South Africa. So I think it's interesting the sources of capital that folks look at. But would love to hear as a state how you guys approach that.
No, absolutely. I think from our side, one of the things we're trying to do is be innovative about where it is that we're going to source the capital. So your traditional capital from DFIs or ODA is one source. But, in Namibia, we're fairly lucky to have a relatively dynamic capital base model, but even just capital markets. So one of the things that we're actually going to be looking to champion this year is setting up green, blue, and transition bonds. And we're going to be launching our central securities depository on our stock exchange to allow for the electronic settlement of bonds. By doing that, we should actually be able to raise capital from a much more broader base, at least for listed instruments. And we'd be looking to list atypical instruments, so not just your typical sort of government bonds or equities, but actually we would be looking to list specific project bonds that will be ring-fencing cash flows from SPVs. And then trying to actually attract capital from markets that at the moment are experiencing multi-generationally low interest rates, right? So we think we have a compelling case to tap into very, very attractive sources of capital at the moment, and we're not trying to restrict ourselves in terms of geography at all.
That's very interesting. And Aubrey, when you're going about thinking about the continental free trade zone, that the big effort towards that, how do you see that shifting the way capital thinks and approaches the continent?
Well, sure. So, one of the biggest challenges African countries have had in attracting investment in the region is that the region as a whole is fairly fragmented. A lot of small economic states, Namibia being one of them, a very small population, though a developed capital market. And that makes it difficult for example, consumer goods companies to set up operations. It makes transit costs high. It contributes to the overall high cost of doing business in the region. And one statistic I always fall back on is, only 3% of the world live in small landlocked countries, but 30% of Africans do. And that just adds to the cost of doing business. So the efforts that the African Continental Free Trade Agreement are making to reduce those barriers and allow for greater free movement of people, goods, and capital make for a larger market and a stronger investment case. So that's very powerful. And to speak overall about the challenges that U.S. investors historically have faced in the market, I think they fall into 4 categories, and James spoke to one of them, the innovation that needs to happen. The categories are quickly a lack of data, and especially early stage data on understanding the markets and learning, a lack of network, who should we work with, local partners, how do we find the good local partner? There's this kind of lack of trust that exists, so you need the right network. Then you also need visibility. You can't invest in things you cannot see. So, the reason why the Stripe acquisition of Paystack is so important is it injects enormous visibility into the region. And last is structural. Sometimes the money that is sitting in, say, US pension funds, for example, is so big in terms of its ticket size, it doesn't match the opportunity. And so you do need financial innovation and structuring. And James spoke to a little bit of that. And those of us like me and Grant and others who've been working to facilitate investment are attacking these kind of 4 categories of obstacles and making progress slowly but surely.
James, when she mentions visibility, I mean, we've seen some major announcements the past few months with the Paystack acquisition by Stripe, with Sendwave being acquired by World Remit for $500 million US, and a lot of movement on that front. A lot of big fundraisers, $20 million plus fundraisers across the continent in early stage startups. How is Namibia approaching entrepreneurship as such? Like, how are you guys fostering and nurturing entrepreneurs and opening it up for them to participate?
Absolutely. So at the moment, at the presidency, we're trying to think about a comprehensive economic recovery plan with sort of some of the other offices, ministries, and agencies in Namibia. So be it, the Ministry of Finance, Central Bank, or National Planning Commission. But a key part of that particular plan actually looks at how we can augment our national SME strategy as a whole. So, for example, it's not just access to capital that a lot of these SMEs need. I think Aubrey put it really well. The visibility, the market access, the network, all of those are elements that we need to bring to the table as a state. So one of the things we're actually doing is we're looking to work with a professional SME developer that has deployed about 1.3 billion rand in the South African space for their Association of Savings and Investment in South Africa. They manage about 4 trillion rand in SA, but a lot of those members are here too. So they would be managing our institutional savings pool, about 200 billion Namibian dollars. So we're looking at why do we should not be looking to reinvent the wheel or certainly to work alone, but we're actually trying to partner with the private sector to try and see if we can't co-fund the initiative, not just, again, the capital, but the mentorship, the market access, etc., to give some of our entrepreneurs a bit of a leg up when we're going into a scenario where we're trying to build back better. I think the other thing that is important for us to think about is we're trying to look at, again, non-traditional sectors for our SMEs to go into. So, for example, in Namibia, one of the things we are going to be trying to develop is sort of a really massive push into the renewable space. Green and blue hydrogen are a real reality for us. We have some of the best solar irradiation around the world, some of the best wind resources around the world. And, the one thing we do have is a very small population, but a large country. So that allows you to deploy massive sort of solar farms and or wind farms without necessarily incurring a massive capital cost to move people around, right? So in doing that, we'll be talking to our SMEs about how they can start learning about, either supplying components to an electrolysis sort of plant, or learning how to, integrate themselves into massive solar farms. So, for example, supplying as basics as food to piping to other sort of inputs that are required to generate that massive infrastructure. We're talking to developers who want to deploy $6 billion US in an economy whose size is about 180 billion Namibian dollars. So that's half of our economy over the next 10 years. That has you have to be quite deliberate about how you plug in SMEs into such a massive development, for example.
And James's country is not only big, it's beautiful. For all of those who haven't been to Namibia on listening to this, I road tripped with my family all across Namibia and had a wonderful time. So when you can fly again and COVID is past, hopefully tourism also helps to buoy the Namibian economy.
And I can't let that go. That's exactly one of the other things we're trying to do. Make it extremely easy for lovely people like Aubrey to come to our country, put down a home, put down some investments, or of course just tour the country and spend their hard and foreign currency. So looking at that home affairs policy is definitely something we're looking at. Thanks for that.
And Grant, when you're speaking to companies, how do you, and I'm sure they ask you a lot of policy related questions with your extensive background, how do you talk to them through US's general approach towards that continent when China has what we've seen, at least at our firm from our conversations, 100-year plus outlook on where they want to position themselves with the continent? Well, with administration shifts, how do you see the US's approach on that in that regard?
The companies that I work with that are looking to find opportunities in emerging and frontier markets, and when we're talking about African markets in particular, they're thinking about how they can de-risk transactions, and working with government or development finance institutions and getting financing tools or risk mitigation help is a big aspect of that. And some of the studies like by Mercer and others have shown really that there are lower default rates in Africa for infrastructure projects compared to other regions. And the de-risking of development finance institutions has been a big element of that. For the US government, they provide tools, they provide advocacy. I think there's a lot more that needs to be done. And Chinese pockets are deep, and Beijing is making a very deliberate and multifaceted approach to the continent and deepening its relationships. And I think that does influence different types of transactions and the government relationships that they have. So I believe that the US government and others need to be much more cognizant and deliberate about the depth of their engagement, the tools that they provide to their companies, the ways that they help de-risk these transactions. For me, though, I am still seeing a fair amount of misperception of risk in the market, which I think provides all the more opportunity for those investors and those business persons who are looking to be savvy and find the right opportunities.
Yeah, and I think the investors of some of the startups from Paystack and Sendwave have seen those outsized returns, and it's exciting to see those continued outsized returns. And I expect a lot more to come in the coming years. I know our investors have made 8x in the past 3 years. Hopefully, it's going to be 16x pretty soon. No, absolutely. And Aubrey, how do you perceive that the allocation of capital where folks are looking to put their money? Are you seeing a lot of movements, mainly in the infrastructure sector, or as well in the internet sector, becoming more with the recent transactions?
Well, we're living in this COVID era still, and we all want to talk about getting out of it, and hopefully these, new vaccines will get us out of it quicker. However, global FDI is down 49% according to UNCTAD, and it's about down 30% into African markets. But the bright spot happens to be in the venture space, which you are a part of, Josh. And what's amazing is even in 2020, the number of African companies that have raised over $1 million has already surpassed the number from last year. So at least we have some kind of steady state continuity in venture, and venture investors tend to be less macro focused. Their main risk vector is the entrepreneur and the business model. And so I think venture continues to be a bright spot. And frankly, COVID is fast tracking digitization. I assume that's the same in Namibia, but many African governments are looking at digitizing services even faster than before. It's pushing digitization and digital infrastructure to the forefront of conversations. And that only speeds up and accelerates some of the progress we've seen in the venture space, in the fintech space, as more and more Africans have cheap handsets and smartphones. We really are going to see the impact of a kind of second wave of the internet revolution, the way we have in India. The outstanding issues around financing for handsets and around the cost of data. When those two things are in place, I think you're going to see epic interest, and that benefits the US because we're a service provider, but we have comparative advantage in things like content production, right? So Netflix, others, Google and Facebook are building undersea cables right now because of the potential of the digital economy in African markets. And so for me, that's a real bright spot on a generally negative view when it comes to investments.
Absolutely. There's a lot of ecosystem development and building that's also happening, which is supporting that in an amazing way. James, how have you seen the impact from COVID in terms of remote efforts and digitalization?
Look, absolutely massively relevant questions. I mean, one of the things we're trying to do, other than obviously trying to encourage digitization and sort of the appropriate deployment of the requisite infrastructure, right? So the towers, we're trying to talk to the MNOs to be strategic about where it is that they deploy the towers, and obviously about open access to these assets, really to the benefit of the consumer relative to the maximization of profit for the MNO. So that's one aspect of it. But another aspect that I think is extremely relevant for us, but for most African countries, is rural electrification, because you want the guys to get the cheap data and good handsets, but you also want them to have ready access to power and electricity. So one of the things we've done is actually our transmission assets, so the cables that take the electricity to the different parts of the country, actually have fiber optics in them. And so we're trying to think about it from a dual perspective: provide electricity, but you can also run broadband access through those cables. And our utility has actually started to monetize that particular asset with some of the MNOs. So we think that's a really good way to try and encourage digitalization of our economy. And then, of course, on top of that, we've sort of recently put together a modified single buyer regime, which allows people other than the power utility to actually provide electricity, using renewables, but other sources of energy as well. Again, really trying to decentralize the potential responsibility of providing power to people. But that was a different aspect of looking at digitalization that I think is extremely relevant in places where access to electricity is not ubiquitous. And then on top of that, of course, when we head back to that SME strategy I was talking about that we're putting together at a national scale, we do have a venture capital fund underneath that we are trying to seed with capital that specifically has very high appetite for sort of very risky ventures. And so as a country, we've put something together we're calling an integrated national financing framework, which is part of our development finance assessment report, which sort of has links to the United Nations. But with our INFF, one of the things we're saying to our government is be adventurous about sourcing the capital, right? And then matching it to the relevant assets or investments that you're making to engender the development of your country, right? I see Aubrey is nodding, because you need a blended financing approach to developing, be it infrastructure or local SMEs. You can't fund all of that just purely on government debt, right? So put together a decent portfolio, obviously look and monitor your weighted average cost of capital, and then deploy that capital and match it to relevant opportunities. So that's some of the thinking we're putting together. We're going to be launching this in December. And of course, we're going to be having multiple platforms as we do that. And I'll make sure Aubrey and Josh and Grant, you all get an invite. And you can come and check out what it is that we're thinking. And of course, we can continue the dialogue after that.
Yeah.
We'd love
to.
Yeah,
I couldn't agree. I mean, listen, I couldn't agree more. I was on a podcast recording this morning and asked, what kind of advice do you give to African officials when you meet them? And I've worked across 30 markets over the last 20 years. And it's that, listen, African countries have a bigger, broader choice of partners than ever before, globally, right? It used to be just your colonial power or, just US, whatever, but now we have the whole range of partners. And what's key though, is for the countries to recognize that certain partners do certain things better. So if you want mining investment, don't do a roadshow on mining investment in the US. We don't do much mining. Go to Canada, go to Australia. That's not where we are best off, right? And the same way with road technology. I don't think roads, let the Chinese build roads. Let Coca-Cola go over those roads. let us do the things we're good at. So African governments being able to match what their needs are with the capabilities, political proclivities, et cetera, of the foreign partners allows for a portfolio approach to development and investment.
Absolutely. Amen.
Extremely well said. Grant, to wrap it up, I think there's a lot of interest right now. There's about to be an administration change in the US pending some final legalization. And I think a massive question the audience and myself would love to know is, from your lessons you've learned working with the Obama administration, what words of advice would you have for President-elect Biden going into this?
I love that James used the term "build back better." That's the mantra of the incoming Biden administration, and they'll be looking to bolster the middle class here in the United States and fight COVID with much more science and earnest than what's been happening as of late. And this incoming administration, I think, will deepen its engagement with African states. They take diplomacy and they take development and they take trade and investment ties very seriously. And President-elect Biden has decades of experience in foreign policy and strong relationships. So I think that that'll be an opportunity for U.S. companies, and I think it'll be an important opportunity for us as the United States to regain our some moral authority and some stature that we've lost in recent years. So I'm optimistic and thinking that this administration change will pose a lot of opportunities for those listening.
Thank you. We all look forward to that. That's very encouraging. Well, thanks you so much, everyone. It's been a privilege to be here with you guys today. And thanks to the whole Concordia team.
Thanks so much.